and welcome to Gujarat Fluorochemicals Q2FY25 earnings conference call hosted by DAM Capital Advisors Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Agarwal. Thank you, and over to you, sir.
Thanks, Sagar. Hi, good afternoon, everyone, and a very warm welcome to Gujarat Fluorochemicals Q2 post-results Q2F25 earnings call hosted by DAM Capital Advisors Limited. On the call today, we are representing Gujarat Fluorochemical Management, Dr. Bir Kapoor, Chief Executive Officer, and other senior members of the management team. I will hand over the call to Dr. Kapoor to take it forward from here, and then we'll open the floor for questions after his opening comments. Please go ahead, sir.
Thank you, Nitin. Good afternoon, everyone, and a very warm welcome to all of you on GFL's earnings call for the quarter ended 30th September 2024. I have with me here a management team, including Mr. Atul Jindal, who is our Group CFO, Mr. Manoj Agarwal, CFO of GFL, and Mr. Kapil Malhotra, who is our Business Head of Fluoropolymers. The company announced its Q2 FY25 results at its board meeting held today on 29th of October 2024. The results along with the earning presentations are already available on the stock exchanges and on our website. I will briefly talk about the numbers and then give you an update on the business operations and outlook. The company reported a consolidated revenue from operations for Q2 FY25 at Indian rupees 1188 crores, which is up by 1% on quarter-on-quarter basis and up by 25% on year-on-year basis. Consolidated EBITDA for this period was rupees 295 crores, which is up by 13% on quarter-on-quarter and up by 80% on year-on-year basis. The EBITDA margin for this quarter was 25%, which is up from 22% in the previous quarter. Consolidated PAT for Q2 FY25 was 125 crores, which is up by 12% on quarter-on-quarter basis and up by 133% on year-on-year basis. The higher depreciation and interest expenses are on account of the higher capex incurred, primarily in the EV vertical. Once the revenue from this segment reaches optimal level, the overall profitability and return ratio will significantly improve. We believe that going forward, with capacity utilization picking up, operating leverage will kick in and will drive profitability and improve our return ratios. Once again, primarily from the battery chemicals verticals, along with pickup in fluoropolymers, where we are continuously moving up in the value chain with higher value-added products. Let me briefly take you through the performance of each business segment for the quarter. During the quarter, the production in the bulk chemical segment was around at full capacity, barring few days losses due to planned maintenance. Caustic prices, which have remained stagnant at lower level, have now started moving up, and now we expect to see a significant improvement by Q4 FY25. MDC prices have also improved marginally during the quarter, and we expect it to firm up going forward. Within the fluorochemical segment, refrigerant prices have marginally improved during the quarter and are expected to further improve going forward. Specialty chemical remained muted during the quarter. However, margins and volumes are likely to improve from Q4 FY25 onwards. Let me talk about fluoropolymers. Fluoropolymer segment has shown a healthy improvement on year-on-year basis. While on the quarter-on-quarter basis, the revenue remained flat, this segment witnessed significant improvement in margin as well as revenue mix, which has changed towards higher value-added grades of fluoropolymers. In new fluoropolymers, over the past 3 quarters, we have been focusing on high value-added grades and new fluoropolymers while exiting some of the fluoropolymers in the lower end segments. Elaborating on the above, qualification for our high value-added grade fluoropolymers, which is used in automotive sectors and which is being driven by the government's thrust on increasing the proportion of ethanol blending, we have achieved a qualification in this segment. Further, the grades required for semiconductor and EV sectors have also been developed, and the qualification is in final stages. Overall, these developments should result in incremental revenues and better margins going forward. The exit of one of the legacy players by December 24 will lead to substantial incremental business from Q1 FY26 for the higher value-added fluoropolymer grades. There are encouraging signs of improvement in all 3 segments, bulk chemicals, fluorochemicals, and fluoropolymers, which are expected to report growth and better margins from Q4 FY25 onwards. Let me give you a quick update on the battery material business, which is catering to EV and ESS segments. As you may be aware that GFCL EV is one of the leading companies outside of China to have such a wide product range of battery materials and is close to commercial production stage. With IRA regulation in US, we expect good traction of our product in the US markets. We have recently raised rupees 1,000 crores in our subsidiary GFCL EV at an equity valuation of 25,000 crores, which is a validation of our capabilities and strong outlook in this segment. This fundraise is the first step towards meeting our capex requirements for the new business under GFCL EV. In terms of the product portfolio, we are ready with our initial capacity for salt, which is LiPF6, electrolyte, PVDF binder, and additive. Also, we expect our LFP plant to come online in Q4 FY25. It is encouraging to note that our battery salt plant has reached the global quality benchmark and is currently undergoing the ramp-up phase. As we are in the commercial ramp-up stage, the frequency of customer visits and audits from many of our customers have increased and product validations are underway. Initial validations have achieved positive results and discussion with few customers are moving towards commercial agreements closures. We expect commercial supplies to commence from Q4 FY25. With the impending commercial agreements, we believe that the capex intensity is going to increase further, and we expect to complete the cumulative capex of 5,000 crores by FY27 and cumulative capex of rupees 6,000 crores by FY28, which we had indicated earlier. For this, our guidance continues at 2 times for the asset turnover and 25% EBITDA margins or at optimal utilization levels. In conclusion, for GFL as a whole, we are seeing a continued improvement in our financials. The slowdown in Europe and adverse business cycles have, however, impacted H1 and delayed our recovery with respect to our earlier plans. However, in view of the initiative which we have taken in the fluoropolymer segment and expected favorable changes in the market, we are expecting a substantial improvement for Q4 FY25 onwards. With this, I would like to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So first question is regarding the 3 segments. You have given, substantially positive and optimistic outlook across the 3 segments. So just talking about individual segments, on the commodity bulk chemicals, I think there is still overcapacity in domestic market. So why we are seeing that there will be improvement in pricing. On fluoropolymers, as I suppose globally auto is currently under slowdown. So again, why there is a positivity? I mean, it is only related to one of the global players shutting down their capacity. And third, in terms of fluorochemicals, again, on the ref gas, the pricings have still benign, plus there is availability in the market. And fluorochemicals, I think there are supplies coming from China. So what gives us confidence that things will start improving from early 26? That's my first question. Thank you.
Thanks, Rohit. Some of these points I touched upon in my opening statement. Let's talk one by one. First is the bulk commodities, where we are seeing strengthening of caustic prices, partly because of the improvement in the downstream demand for it, and also global caustic prices are firming up. Okay, and in our case, where we are fully utilized on chlorine, it's a positive when the caustic prices improves. Coming to fluorochemicals, the fluorochemical specialty chemical, of course, is a very small segment for us, where we have seen intense competition from China earlier. However, going forward, we are expecting some improvement in the demand in downstream in agrochemicals, which we expect to improve and see in the Q4 and FY26. In refrigerant case, what our reading is right now is that, as you know, that the quotas are being cut for R22 significantly from next year onwards. And based on our past experience, with the reduction of quota, there is always a significant hardening of prices. And based on our past experience, we expect to be a positive movement in terms of pricing as well as also the volume. Coming back to fluoropolymers, you talked about the automotive segments, and you talked about the automotive segment. Though, when we look at our own product portfolio, we are looking at the specific product segments where we have a strength, and there are new applications which is emerging. Particularly, what we talked about earlier was ethanol blending. Now, as the automotives are moving towards ethanol blended fuel, there is a requirement for fluoropolymers as a new application, which is not there. So based on these things, so our growth that we are projecting or what we are expecting, the positive movement, is with respect to the product portfolio and the grades and the new polymer segment in which we are playing together. Okay. So this is what we have. And I would request Kapil, if would like to add any point. Kapil Malhotra is our business head fluoropolymers. He is with me.
Yeah, thanks, Dr. Kapoor. Rohit, in fact, whatever Dr. Kapoor has said is absolutely true in my segment. And even in automotive segment, the demands are pretty steady. And as the ethanol blending takes away from 1st April next year in 2025, so we expect the demand to come forward from January itself onwards. And most of the grades which we are talking about, we already got qualifications from our customers, Tier 1, Tier 2, and even the OEMs over here. So that's a positive statement which we have made, and we're looking forward towards it increased business.
And one more thing that you asked about, Rohit, is about the legacy player going out. So while we have been saying the legacy players, but what we expect the full impact of that to be visible in FY26, because the production of this legacy player is actually going to end only in December 24. So while we were expecting impact of that to be visible several quarters back, but unfortunately it has slowed down, and now we expect to see it ramping up. And also, in last several quarters, we have had our qualifications of our product approved with those customer segments, and we are fully ready right now to capture the demand that is going to be created by the production cut or the lack of volume availability from this legacy player.
Sure. This is helpful, sir. So second question is on the GFCL EV business. So we currently have invested 700 crore rupees. Again, one clarification. So effectively, considering the 2x asset turnover, it should yield us about 1,400 crores of revenues at 25% EBITDA margin. Is that understanding correct on this business?
Broadly, it is correct, Rohit. Let me give you a slight, clarification on this. First of all, there is a period within which the qualification happens, and once the asset comes in line, the optimal volume, which gets, utilization volume, which takes typically in the beginning, it takes longer. I would say 4 to 6 quarters. However, at the later stage, this process actually is more rapid. So we are still maintaining asset turnover 2. However, it has to be, there's a lag period between the time when we make these investments and the full optimal utilization is achieved. Okay.
Right. And just one clarification on this. So the existing fluoropolymers business which we are reporting, it does not form part of GFCL EV, right?
No, it does not.
So, that's all from my side. Thank you and all the best. And
thank you, Rohit. Thank you.
Thank you.
Thank you. Participants, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2. If you have any follow-up questions, you can rejoin the queue. The next question comes from Ketan Gandhi from Gandhi Securities. Please go ahead.
Sir, thank you so much for restructuring of the holding company of the GFL group, whereby after 20 years you are unlocking the value, the huge value creation for the shareholder of the minority shareholder of the holding company. I think very few management takes care of their loyal shareholders by this kind of a demerger. So thank you so much for that. And sir, while demerging this, we are doing some structuring regarding the wind business of the fluoro. So GFL will have any positive impact while doing this restructuring?
Thanks, Mr. Gandhi. I'll let Akhil take this question. Akhil, please.
Yes. By virtue of this demerger, this is our effort to make it a clean structure where the ownership of GFCL will go directly to the in the hand of the ultimate shareholders, which is the promoters.
Sure.
And to that effect, I guess the structure will become much more clear. And to that effect, the holding company of GFCL will be just holding the GFCL assets rather than the combined and the mixed assets. It's our belief that going forward, this would enable us to have a better distribution policy. It would enable us to have more fund flow in the hand of all the shareholders, because as and when the company becomes more and more cash positive, the intent is to move on to a distribution and a much firm dividend policy. So this is the positive effect that the shareholders of GFCL will see on a day-to-day basis, and this is our effort to clean up the structure without affecting the shareholders of GFL directly.
I understand that, sir, but my question is not pertaining to this. My question is, does GFL have any asset which will be merged into the holding company, whereby we can get some kind of a cash infusion?
No, that's not the case, because the holding company was a pure holding company, and it was having investments of two different companies, which is now being cleaned.
Okay, thank you. I have some more questions. I'll join back in the queue.
Sure. Thank you.
Thank you. The next question comes from Arun Prasad from Avendus Spark. Please go ahead.
Good afternoon. Thank you for the opportunity. Dr. Bharat Kapoor, first question is on this production stoppage of this large customer, where we are confident that the fluoropolymer segment will grow. My question is, how do you get this confidence that so we have other competition also which is still will be running. So do you think that the redistribution of this volume to the remaining players will be in a fairer manner, and what kind of a fair share that you are expecting from this stoppage?
Thank you so much, Arun, for asking. And I'll make one comment and then let Mr. Malhotra answer this. I think the confidence that we have is coming from the fact that we have already been qualified in a number of the customers who are currently taking product from this player that we are talking about.
In fact, in the last investor call also I had mentioned that we are moving towards the higher value-added grades, and also the legacy player who is exiting is also in the higher value-added grades. So the benefit which we get is that we are moving into those applications where the place vacated by this legacy player is also fulfilled by us, and we expect a very good market share, as a lot of our products which were drop-in have already been approved. We have already started getting the businesses, and the other products which were being evaluated have either qualified or are under the advanced production qualifications. So by Q4 2025, we are expecting the incremental business to start coming much more rapidly, and we expect that market share is going to be good, as the other two players and we people are forming the three major segments where we are going to compete with each other. So we are going to expect a very good market share over here.
So going by what you said, we are expecting a fair share of 33% from this player's volume. Is that right target?
Yeah, that's a fair estimate, but it can be even better also, because we are definitely trying to go for applications to the level there.
Is there any chance where we could be getting less than the fair share, because we are probably from the different region and the local players would get preferential treatment from the customers?
No, I don't think so, and we have a pretty good place in the market with the customers. Pretty well placed.
Right. Secondly, we spoke about this R22 price increase after the quota getting reset next year. When the R22 price increases, typically does the downstream fluoropolymer price also goes up, or it remains same, and indirectly the spreads become contracted? How does this happen usually when the quota resets and the price goes up?
So in our case, Arun, the situation is that it's possible that there may be R22 is linked to one of the fluoropolymers. You cannot put all the fluoropolymers because other fluoropolymers have a different, it's only the PTFE part. So it's possible that with firming it up, there might be a change. However, for us, as we are backward integrated, and also the R22 is a small part of the cost overall for us. So I don't think there will be a significant impact on that overall margin squeeze going forward.
Okay. The reason why I'm asking is when there is a volume decline, that is usually compensated by the price increase of the end ref gas. But in case of an integrated player, this is unlikely to play because unless and until the end product price also goes up. So we will, as an integrated player, we stand to lose. Is a fair assumption? Fair estimation?
Let me just clarify one more point here, because the R22 again has, it's used as a feedstock and also used as a refrigerant. So price increase that we are talking about is in the refrigerant segments only. Okay, because feedstock segments typically is also under controlled segments, and it may not have it.
Okay, so we will be diverting our ref gas volumes to the feedstock segment when this quota gets implemented.
Hello?
Yes, sir. Audible?
Sorry, Arun, we missed the last sentence that you said. I'm sorry.
Sorry, I was asking, so when this quota gets implemented, we will be shifting the volumes from the ref gas segment to the feedstock segment, right?
No, not really, because the ref gas allocated quota for us is fixed. And you are separate because for feedstock, it's coming from our different plants, so it's I don't think it impacts.
Understood, sir. So finally, on the battery side, you said on the LF salt side, the commercial agreements are in the stages of closing stage. So can you just give us some understanding how many of these customers have a live operating plant where they can take this salt and ramp up their facility? And same as on the LFP cathode side, you said that Q4 will be starting, but how many of your customers have a plant which can start consuming these products of ours? That's it from me.
So, Arun, most of the customers that we are talking to today have an operating plant. Again, this we are talking about a global set of customers. These are customers who already have ongoing plant, and a lot of it is somehow looking at de-risking their supply chain. So that's one of the key part which I stated earlier. So they would like to de-risk it from a dependence on one country. So I cannot really give you much detail on the customers. However, I can tell you that the most of the discussion that we are having today are with the customer who are already using salts, and also in case of a LFP, they are starting to ramp up their requirements.
Okay. And
however, the LFP will take some time because there will be a qualification period involved in LFP. It's just being a CAM material.
Understood. So can you give the combined capacity, manufacturing capacity of these customers? I'm not asking for the individual customer level, but the combined capacity, battery capacity of these players, customers with whom you are talking right now?
It would be difficult for me to give because when we talk about the market, we talk about the U.S. market, which is, at several hundred gigawatt hours at the moment.
Understood. Thank you very much.
Thank you. Before we move on to the next question, a reminder to all the participants, please press star and 1 to ask a question. The next question comes from Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, hi. Good afternoon, sir. First of all, I will apologize. I got into the call late. Some of the questions may be repeated in nature. If you can choose not to answer it, I will read that in the transcript. First, on the gross profit margin side, there is a good 300 basis point improvement quarter-on-quarter. If I look at the revenue mix, that really hasn't changed much. And absolute revenue growth has also been not to an extent which can drive a 300 basis point margin improvement. What has really led to sudden sharp improvement in the margin? That's number one. Number two, whether it is sustainable and are there more headroom to grow?
What was the last statement? Sorry, Sanjay, the last sentence that you said. It's income close to the mic.
Is this margin sustainable? Is this margin sustainable? And are there more scope to improve it?
So, any more questions? Shall I answer?
I will take one by one because probably I came late, so I have a little bit more.
So as we had indicated, that a lot of it is as we are, as we are moving into the new fluoropolymers, our effort has always been to go up the high value-added product grades where the margins are higher. So what we are seeing today is the result of what we have been talking about earlier and moving towards higher value-added fluoropolymers and also which is in the new fluoropolymers grade. So that's the change of the product mix and coming out of some of the lower value-add segments is what is resulting into a jump in this overall margin that we talked about. And we believe it is sustainable because of the sticky nature of the business, and as we are getting more and more into these high value-add segments, we expect these margins to be stable and sustainable.
Clear. And just now that we are this calendar year, how are your discussion with your customer for next calendar year for fluoropolymer? We have an ambition to reach 2,000 crores of EBITDA by end of this fiscal year on our exit run rate. Are we on course for that and a growth from there is possible? That's the other one.
Yeah, I think one of the reasons why we have been talking positively about fluoropolymers is because the ongoing discussion with our customers is quite positive, and that's where our confidence is emanating from. So I'll let Kapil also add on to this point. Kapil, please.
Yeah, you are absolutely right, and we have been also maintaining the same statements throughout. And we have started seeing the results of that, and from the next quarter we'll start seeing results further on as the opening up of the new sectors, new applications in the semicon business also keeps on getting added. And as we said that we are under advanced stage of qualification and have already got some qualifications with the customers. And whatever discussions we have been having on the business front with the customers, it is going in a very, very positive direction.
Very clear. A related point, we did push back the capex last year when things were softer. How does the capex pipeline look like? Have we completed the new fluoropolymer capacity expansion from 700 to 1700 metric ton per month? We were looking at debottlenecking PTFE by 3,000 metric ton per annum. And again, backward integration, EDC. Where are we in all these capex cycles, and what is the plan for next year?
See, we are more or less, completed those capexes that we are talking about, except some of them which I had mentioned earlier, we had delayed or staggered, particularly Sanjesh is in PVDF, for example, where we have some capacity, but we have not added the full capacity there because we are waiting for the market to pick up and then add. So we are prepared in terms of the monomer capacity being in place. However, on the downstream side, we have held back yet. However, more or less, if the new polymer capacity that we had projected, we are more or less there except for PVDF.
And next year capex will be?
It's I would give us a quarter. We'll tell you more about next year capex. Right now, of course, the focus is to build the EV business and add the capexes there and rapidly take it up. So, however, in fluoropolymers, we are prepared with respect to our complete backward integration, and as we see market requirement coming up, I think we are well prepared to add capacities. However, these capacities are now going to be incremental, looking at the market conditions.
Fair enough. Now talking about the battery chemical and the restructuring, I really didn't get the restructuring part of it. Can you help us understand what exactly restructuring are we doing? That's number one. Number two, now that we have raised 1,000 crores in battery chemical, which allows us to further do the capex in the GFEC, Gujarat Fluorochemicals subsidiary side. How do we look that part of the fundraise, and what is the objective of the fundraise?
I'll let Akhil answer that structuring part first, and then we'll talk about the funding and the fundraise.
I think, as I explained in one of the previous question, it's a simplification of the structure rather than anything complex around it. So it's just that the alignment of shareholdings of GFL directly in the hand of the ultimate shareholder is what our ultimate objective is. Also, we want the simplification of the structure, that the holding company currently is having different businesses, different holdings, which is also being simplified in this whole process. So in fact, there is no direct impact on the shareholders of GFL directly. When I mean shareholder, I mean the outside shareholder other than the promoter family. And obviously it will lead us to a better distribution policy as we go along. On the second part, which is the fundraising, this has been done for the GFL EV, and this all is being put to use for the capex plan for GFL EV business, as Dr. Kapoor mentioned. We have roughly around 5,000 crores of investment planned up till FY27, out of which almost 1,000 crore is already invested. So this 1,000 crore will enable us to be funded for the period of next 12 to 18 months. And then the cash, the internal accruals and other thing will also start. So I guess this is the main objective, that EV should start standing on its own feet in terms of the capex planning and funding its own investments. And this is the first initiative that we have taken in this company to fund from the outside sources rather than the GFCL internally.
Got it. And what is this 1,000 crore capex planned for in next 12 to 18 months?
Yes.
We have all the plans up and running,
what
right?
we have raised right now. Okay. And the capex plan is, Sanjesh, we had given a broad number, that 5,000 crore by FY27 and 6,000 by 28. So it will be spread, and it would be difficult for me to say that where exactly I will be spending 1,000 crore or 500 crore in the next quarter or next 4 or 5 quarters. But the broad plan is what we have indicated. So 1,000 crore raise is a step in that direction. It's the first step, as we mentioned in our opening statement. And Capacity expansions are planning to be mostly in the same product line that we talked about, which is salt and LFP cans, and also electrolyte.
Got it. So basically, we have put up initial capacity, and wherever we tie up for the larger capacity, that's where the capex will be deployed. Will that be a right way to think?
Exactly, that's right. So basically, we have commercial scale. Our plan is to have all the products, the commercial scale plant, ready and operating for qualifications, close the commercial deals, and then expand or add capacities along with the customer requirements. This is the plan that we'll be doing it. Okay.
And then you mentioned about certain deals being talked about. Even in the previous quarter, you did mention that Q3 onwards will start.
Sorry, once again, I lost the last sentence. Sanjesh, please. Will you repeat that? Hello? Hello?
Sir, the line for Sanjay sir has been dropped.
Yeah, some problems. Okay. Thanks.
No problem. We'll move on to the next question. The next question comes from Aditya R. from Sowilo Investment Managers. Please go ahead.
Good afternoon. My question was little more in the macro. So we've been facing pressures from China, and you also spoke about the situation in Europe. So can you throw a little more color on how that has panned out, and because the commentary was positive, so I just wanted to get some idea on that.
Very difficult. I'm sorry, Aditya. Could you come up again, please? And come closer to your microphone, please.
Yeah. So is it better now?
Yes, please. Better.
Yeah. So my question was more on the Chinese situation. So we've been facing a lot of pressure, especially because of the overcapacity there. And then you also mentioned today about the European market. So I just wanted to know how the situation has panned out, and how is it right now? Like some color on how it is currently, to get some idea of what we can expect.
Yes. So the way it is, yes, you're right. And I presume you're asking in context of battery chemicals. Is that right, Aditya?
No, the fluorochemicals.
Fluorochemicals. See, in fluoropolymers, obviously, are you talking about fluorochemicals?
No. Fluoropolymers. The polymers.
Fluoropolymers, okay.
Yeah.
So in fluoropolymers, in most of the markets and the grade that we operate, we do not really have a direct competition with Chinese products. I think we have stated that earlier also. Clearly, having said that, we have competition with legacy players, established players, and our effort in that segment has been primarily to go up the value chain, going and add higher and higher value products. And we have been progressing in this journey for quite some time. And we believe that with the specialized material portfolio that we have in fluoropolymer is essentially, we are trying to capture the market which is very, very high end. Whether it is the high end of automotive segments or it's the high end of semicon or EV. So from that perspective, having a very high or the overcapacity on the fluoropolymer is not really the right reason for any kind of concern in the high value-added grades.
No, totally agree.
Okay, all right.
Okay. So then my next question would be, there was talk on the polyfluoroalkyl substances, the PFAS, them being banned. So what kind of effect that would have?
I presume you're talking about the PFAS substances?
Yeah, PFAS, yeah.
PFAS, okay. So I think we have already given our view earlier also in the PFAS, that PFAS is it's an area of concern. However, most of the regulatory authorities globally have taken a view that the fluoropolymers are not really are the PFAS of concerns, because these are very long chain molecules which do not actually migrate or are not going to the aqueous medium. So fluoropolymers, in a way, are as a product is not really an area of concern related to PFAS.
Okay.
Aditya, sir, you have any other follow-up questions?
No.
Thank you. Next.
Thank you.
The next question comes from Sanjesh Jain from ICICI Securities. Please go ahead, sir.
Yeah, sorry, I got dropped off previously.
Welcome back.
Thank you, sir. Just I was asking on the battery chemical side. You mentioned in the previous call, and you also highlighted even in the previous responses, that you are looking to get certain approvals in the next 1-2 quarter. And in the previous call, you mentioned that there is possibility of a commercial supply starting from Q3. Are we on course for that?
We, I think, said that our supply or the revenue from the battery chemical would start trickling in from Q4 onwards, and we are still maintaining. Our products are at qualification stage still. We have, because there are several steps in qualifications. At this point of time, in some of our products, we are at the final stages of qualification, which is actually in the battery testings. That's where we are. So as soon as we get the qualification, we expect our supplies to start, because on the commercial front, Sanjesh, we are ready in terms of supplies.
And how has been the product so far? What has been the responses? What has been the area of improvement? Where are we exactly in the product life cycle of commercialization? That's number one. Number two, on the LFP, how is that progressing? Are we on course again in the Q4 to commercialize the plant?
See, let me ask the first question. That in terms of qualification, there are several stages. We are in the final stages of qualification. We are getting a very good traction, and as you know that we started our plant several quarters back, and then we have been working on getting the benchmark quality, and we have achieved that now in terms of having a global benchmarks, and also very close to getting qualified. Okay, we are at the final stages of qualifications. So from that perspective, I think we are getting a good traction, because once we have a commercial plant which is operating, we have a sample in our hand, the customer traction is very, very different, Sanjesh. Okay. And we are getting a very, very good response from customers, and we have engaged with a very large set of customers on this. Coming back to your question on LFP. LFP, our plant would be mechanically complete very close to the end of the year. So we are probably maybe 2 months behind, I would say. We'll be having but we'll still have our production being there in the Q4 of this financial year. LFP, however, being a CAM material, has a longer qualification cycle compared to salt. So that process we have already started with the lab samples, and as our commercial plant starts producing, the final stage of sample will go from the commercial plant for qualification.
And plant performance in terms of yield, pricing, profitability, are we able to achieve what we would have envisaged, and how it is versus, say, Chinese peers?
It's a little bit too premature for me to talk about that, but I'll definitely give you an update once we ramp up the full capacity and start our supplies. Okay. But we are going step by step. The first thing is to get the benchmark quality, then ramp up the capacity, and then look at we have no doubt in our mind not meeting any of the global benchmarks, either in terms of quality, operability, or the efficiency parameters.
Very, very nice to hear all those. Thanks, Veer, for bearing with me and answering all those questions so patiently. Thank you again.
You're welcome as always.
Thank you. The next question comes from Yash Shah from Investec. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, I just had one clarification question. Earlier in the call, you said that we would like to self-fund our capex for the EV business, and which will require capex of about 5,000 crores by 27 and 6,000 crores by 28. Does it mean that we'll be raising more 4,000 and 5,000 crore respectively for the EV business? And if so, through what mediums have we planned on that? That's all, sir.
Sure. Thanks. Yash.
No, so as we mentioned, we have already invested close to 1,000 crores in this business from the parent. 1,000 crore is what we have raised in the market as we declared, a few weeks back, and also on this call. We're in advanced discussion with a sovereign fund to invest, around $100 million. So that's going to be our another source. Plus, as and when required, we will go for another round of 800,000 crore in the through this initiative. What it would mean is that close to 3,500 crore will be invested through these sources, and the rest will be by way of an internal accrual. As Dr. Kapoor mentioned, that most of these capacities will start coming in and will start contributing and having a free cash flow to fund the further capex. So our overall plan is to raise up to 3,000 crores, 3,000 to 3,500 crores, including the 1,000 that we have already invested. So that means additional 2,500 crores, and the balance would be through the internal accruals.
So do we expect to have internal accruals of 1,500 crores to 2,000 crores by FY26 to incur capex in 27?
Possible, because we are giving the guidance up till FY27 of total 5,000 crore, and if we have already raised 3,500 through internal, including the GFCL contribution, 1,500 crore should be possible through the internal accruals over the next 2.5 years. Yeah.
Got it, sir. Got it. And one more question, sir. Incremental to this capex, what is the capex guidance for our base business, bulk chemicals, fluorochemicals, and fluoropolymers?
Yeah, right now, I think as we had indicated, in this year, 500 crores is what we had planned, 500 in CSL and 700 in EV. I think we will give you a guidance probably in the next quarter, probably sometime in January, about the plans for the GFL. Okay. Because which will again be primarily on the fluoropolymer focused. Okay.
Yeah. Okay, sir. Perfect. Thank you very much, sir. Yeah.
Thank you, yes. Thank you.
Thank you. The next question comes from Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah. Thanks for the follow-up. So just again talking on the capex front, you just mentioned that the GFL has invested 1,000 crores, but this year's capex plan is 700 crores. So why there is a disparity?
When we said 1,000 is up to the total for the EV business, which includes the amount of money invested in the previous year also. So I said up to date, the investment in GFL EV business by the parent is 1,000 crores.
Okay, and this will remain static. There would not be any incremental investment now.
I mean, we hope to fund it from external sources as we have done it now, and that's where I guess most of the fundraising activities that are going on, which we also mentioned in our previous quarterly call, that we have got a lot of traction coming from various investors to fund the EV business, and in that direction we have already raised 1,000 crore in this quarter, and as and when there will be fund requirement, we will be further tapping the market on that count.
Fair enough. That is helpful. So just second clarification. Now, historically, we had consolidated margins of closer to 30% for the GFL business. Incrementally, for the EV business, it will be about 25%, as you have indicated. So going forward, do we see margins in the range of 25 to 30% for the consolidated entity, including the EV business?
Yes, I think, consolidated guidance that we had given was?
Actually, 25%.
Yes. So, hello?
Yes, sir. Yeah.
Yes, Rohit.
Okay.
So what you're asking, as I understand, is that GFCL EV, we are saying 25%, and in GFL, we have been talking about 30 to 35%. Is that right?
Correct.
Correct. That's what we have been saying. Although at the current scenario, the margins are standing at around 25% for GFL as well. But with increase in the high value add fluoropolymer, we expect it to go up. Okay.
Sure. This is helpful. Thanks a lot.
Thank you. The next follow-up question is from Aditya R. from Sowilo Investment Managers. Please go ahead.
Yeah. Thank you for taking my question. So, there was this regulation on the Inflation Reduction Act, right, from the US, and there they spoke about how they want to phase out a particular company from the whole supply chain, at least attempt to do that. So, I just wanted to get a sense of how quickly is that transition. I mean, now that it's passed, how quickly do you expect that transition will happen?
You mean transition
for battery chemicals?
Because of
for the battery material.
IRA. Okay.
Yeah.
One of the key requirement of the IRA is that the subsidies which is being given on EV products by U.S. government, that subsidies, the components and the battery components and material which goes into making those batteries should not really come from FEOC countries. That's the main reason. And so it should be. So there are two parts to it. One is related to components and assembly of battery components. And second is with respect to the critical minerals should not be from any of the FEOC country, which is foreign entity of concern, which they have indicated the name of the several countries there. So we expect as it's evolving, so some part, it's basically IRA Act is started from January 25, and then it will slowly kick in terms of percentages of the non-FEOC components. And also in critical minerals, there should not be any component from FEOC countries. And these critical components being fluorine and lithium at the moment. So it will phase it in, but the way we see it is all the growth which is going to come in U.S. markets, primarily is none of that growth or even some of the existing businesses will come from any of the companies which are associated with FEOCs. So this will have a very significant and rapid impact in next 2 to 3 years. As
so you
the
see,
IRA
so you see the timeline to be 2 to 3 years for the transition?
Right. So in some cases it has already started, and in some cases, for example, like salt, they had given a 2-year time frame, which are actually fully kick in from January 27. Okay.
Okay, got it. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
So thank you very much, Nitin, and I would like to thank each and every one of you for being part of this call. As I had mentioned in my opening statement, we are, although in last 2 quarters, because of several reasons, the growth was not as we expected it to be. However, going forward, the traction that we are seeing in the market, particularly driven by the fluoropolymers market segment, we expect to see a significant improvement, and we expect from the FY26 to be significantly better. And I think that from now onward, we are seeing a continuous improvement, and we expect this journey to continue. And certainly, FY26 will be a lot better than the FY25. So with this, I would like to thank you all, and thanks for interest in GFL. Thank you.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.